Patrick Karim from NorthStarBadCharts.com is back once again to talk charts, gold, silver, and the US dollar. This and more on this week's episode of Metal Money. I'm your host, Patrick Vieira. Patrick Karim, welcome back to Metal Money. How are you doing?
Hi, Patrick. Always a pleasure to talk with you. It's awesome.
Hey, always great to see you. Always great to see you, and glad to have you back. A lot has happened since the last time we spoke. Patrick, looking at a weekly U.S. dollar chart, we can see where the Fed intervened in March of 2020, and since then we can see the U.S. dollar has been pretty much on a downward path from 103 to now bouncing around at 90. And at the time of this interview, the dollar is slightly below 90 at 89.89. Short term, do you expect the USD to work its way out of this channel and upward, or do you see the dollar continuing to move downward?
Well, whenever like I'm looking on the short term and you see there's counter trend rallies, it's going back up, and then oh no, it's going back up. The downtrend's over. I always like trying to take a step back and look at, let's say, semestral charts, quarterly candle close charts. And the US dollar right now is at a historical pivot point, and I think it's at 92. So if we close the quarter, so Q1 close in March, Q2 and semestral is going to close in the end of June. If we close below 92, that means the back test of that critical pivot line that's like, I think, from the 1970s. That means the market decided I can't close back above, so you're going to resume the downtrend going backwards. Sure, you could have a spike on the smaller time frames and you could have a wick that's above 92, but as long as we close end of June below 92, for me it's game on. That the pressure, we have a 1 year and 3 year moving average bear across us above us, putting pressure down on the US dollar. I have other charts where even at a diagonal, at an angled line, US dollar has broken down. So even if it's trying to pull back up, it's hitting upwards resistance. So right now it's at like a decision point. It's really close to even a meaningful breakdown. So I think that below 89, a monthly close below 89 or 88, this US dollar should really start melting down.
Okay, we'll start looking for that number, see how it pans out. In keeping with the U.S. dollar, you mentioned in a tweet how the M2 money supply explosion is about to be priced in silver. What led you to say this?
Well, I always try to look for correlations, but in different way, because often you put you put a chart and then you put a correlation coefficient under, and then you say, look, there's not really a correlation. But when you overlay two charts together, sometimes there's a lag. You could see visibly the correlation, but they're like detached, and there's a lag after an event happens. Usually another event happens until, I don't know what's maybe the narrative I could put on that is, let's say you have an explosion in M2 money supply. That velocity, that rate of change, that explosion, it takes time for the effects to be priced in all assets. So it's not on the day that there's a money explosion that the market's able to instantaneously perfectly price that in. So that's where I see we have an edge, right? So if we're able to identify huge explosions like in the M2 money supply, then how did silver behave once we had those insane explosions? And if I look all the way back to the 1950s or 60s, every time we had a M2 money explosion, so the M2 didn't have to go nominally super high, but just it was at a level, and right away they opened the spigots and it went up. As soon as the money supply explosion started slowing down and started going back down, then the market, okay, I have to start pricing that in. And we had insane moves in the silver. Every time it happened twice in the 70s, silver exploded right after. 2001, 2002, as soon as the money supply exploded and stopped exploding and started running down, silver started pricing that in. I don't know exactly how, 3 months, 6 months, 9 months, same thing after 2008. And it happened today. And I have a generational breakout line on that chart where all those money explosions, the 1.2, 3, 4 point, we just broke out of a generational breakout line from M2 money explosion. I'm scared to see what's going to happen, Patrick. Honestly, we're above all-time highs in rate of change from M2 money explosion. So as soon as that starts the market says, okay, the money explosion is done, and starts pricing that in the silver, man, it's gonna be epic. It's really, really scary stuff, man.
Something else on a downward trend, which you tweeted out and charted out, was a market crash leading indicator. Can you go over the chart with us?
So I've noticed pre, in a prelude of a liquidity crunch. So this happened in 2008. It happened in March. What happens is you can see the GSR, the gold to silver ratio. Often we use it to know if you should be more balanced towards gold versus silver. But you could also see the gold silver ratio as a like a VIX, like a volatility indicator. So the higher the gold to silver ratio is, that means people are more heavily in gold, which is like more defensive, and less in silver, which is inflation and riskier. So you have a high gold to silver ratio. But if you overlay the gold silver ratio with the VIX, another indication of volatility. So when the VIX spikes up, markets usually are lots of volume. The markets are crashing. When the VIX is low and um, less volatility, low volume, then the SPX is grinding higher. If you overlay those two together, they track almost to perfection. If you add also the US dollar to that, same thing. What happens in the liquidity crunch? Then everybody's selling everything. They're piling to the US dollars. There's probably other narratives and macros associated, but the DXY, the VIX, and the gold silver ratio, they behave practically the same pre and post and liquidity crash or event. So right now, those are like my three checklists. If sometimes the volatility spikes up and the gold silver ratio might spike up, but the DXY does not believe that that's a real scare, it won't spike up. It's going to continue on its downtrend. For me, that's not the three green lights to say, okay, we're at a scary event where there could be a crunch. So as long as I don't have those three at the same time, and usually the US dollar is going to be the last one to confirm a spike in the GSR, a spike in the VIX. As long as the US dollar is subdued, for me, it's still risk on, and it's still time to stay long silver and even US equities. They might go sideways, but they're not at a huge liquidity crunch where they could drop insanely like we had in March. And for me, that's like my market crash indicator right now is I'm keeping an eye on those three. So as long as I don't have those three breaking above their trend lines and spiking up and doing higher lows, crescendoing into a parabolic melt up on those charts, then I think it's all pretty much noise there every time we have a spike in the VIX.
Very interesting. Thank you for that. Seeing the U.S. dollar again on a downward trend, overvalued markets, bond markets, where rising rates will cause a loss to bondholders, inflation creep. Tell us what you're seeing as far as the short-term price action for the safe haven assets of gold and silver.
Well, there's on the short term, it's always easier to you have to have an upwards bias on the short term when you're in a generational or yearly or monthly or quarterly defined uptrend. So the surprises are always to the upside once you're above inclining 1 year and 3 year moving averages. And we've seen in silver that it's and even gold to some extent, it's in its DNA to surprise and start rising rapidly, parabolically, even on the shorter time frames. So it's always tricky to try to predict corrections when you're in a bull era, especially right now. So the longer we corrected, so since we had those August highs of last year, and right now, technically, we're already starting to turn up. Silver is really closing in on that 27, 28, 29 monthly defined, quarterly defined breakouts. Um, Estimating a crash or a severe correction or a correction in silver right now is a low probability event. Right now, you have to look upwards, and you just have to wait and hold on tight as silver is really coiling these days, really close to that breakout line. And the targets for me on the short term for, let's say, for silver for in even this Q2, I really expect it to go in the 30s and even overshoot on the smaller time frames to maybe 40 or something like that this quarter. And of course, the markets take sometimes more time than my imagination. It could maybe stretch a little bit in Q3. And as soon as silver does that move, I think gold's still going to do good, but gold should really shine in Q3 and really make a move above its all-time highs there, above the 2,000 mark in Q3. So for me on the short term, like that's pretty much like the shorter term. In the next month, Pat, next month or two, really eyes should be on silver. There should be some fireworks there in that sector.
Okay, eyes on silver. Uh, so these are the probabilities that we're looking at more of an upside, I guess, for gold and silver. But I mean, within that, I would have to ask, how about the downside? Where do you see the low side for silver and gold?
Not for silver and gold, not much lower than where they are now. So at this stage, if silver can't put in a new high, then we're at a risk of being like in the 2007 and 2008, where silver could not put in a new high, and then after that we went into the GFC crash. It'd be very bearish for silver not to be able to have a monthly close above its August 2020 highs. Um, so on the smaller time frames, I think we've already had the lows in silver. So if somebody was day trading, we've had those wicks dip below, but it always refused on the weekly basis or monthly basis. It refused to close, to make new lows. So I wouldn't expect it. Of course, silver could have some intraday or intra-week volatility and spike down to 26 and a half or something like that. But it's not going to stay long. Really not expecting much downside from now on, especially how close we are to the breakout line. It's getting squeezed up. I'm expecting really a lot more upside than downside.
Okay, so just to clarify, that breakout line is about what price point again?
On the monthly chart, if 28, if you have a monthly close, a quarterly close above 28 or 20, let's say 29, just to make it convincingly. So sometimes you have breakouts, they're on the trend line. You like it when it's a convincing candle close above. So a June close above 29 or even a May close above 29, it's go time for all these upwards target there that you guys have in your dreams.
Yeah. Patrick Karim from NorthstarBadCharts.com. We appreciate the time you've given us and look forward to doing this again soon. Appreciate the work you do.
Thank you, Patrick.
There you go, Patrick Karim, helping to chart a course for the short-term price action we might expect to see. As always, leave your thoughts in the comment section below and remember to keep it liquid, keep it real, and I'll see you on the next episode of Metal Money.